Welcome everyone on how to decipher your Form 990. I'd like to introduce our two presenters today. Our first one is Elena Serabakova, who's a managing director in our tax department here at BPM with a focus in our nonprofit services. And her nonprofit experience includes various types of nonprofits, including foundations, professional membership associations, education organizations, performing arts, and social welfare. Joining Elena today is also Ben Cohn, a supervisor in our tax department, who's also been providing tax compliance services for nonprofits for over 10 years. He too works with various nonprofit organizations and universities, including hospitals, performing arts, pension funds, and private foundations.
Next slide. Okay. First thing to keep in mind is your Form 990 is a publicly available document. So through this presentation, please remember, anybody can go on the internet, pull your Form 990, look what you do, look how the organization presents itself. It's on not only GuideStar and IRS websites, it's available on numerous websites. It's ProPublica, it's Attorney General websites, and people go and pull 990s. Some people pull it for comparison. Some people want to know if I want to donate to your organization, how your organization manages finances, what programs do you do. So keep it in mind. Everything on 990 except specific portion of Schedule B is open to the public. Some questions we usually get, which is not exactly a 990 question, but they relate to 990s. What IRS says about the board? Who can sit on a board? And IRS actually doesn't tell organization who can be on a board, who cannot be. There is best practices. You should have independent board, hopefully. You won't have, like if you're a public charity, IRS says if you have a lot of independent board members, it's better than if it's family members or it's people who do business with each other. So that's one of the guidelines. Different states actually can govern who can be on a board, how many officers you should have, what officers you should have on a board. So for the charity, if you're a charity, it's 501c3 organization. Go on California Attorney General website, find Attorney General Guide for Charities. It's a publication, I don't know, it's about 30, 40 pages, I think, maybe more. It goes through the main principles that nonprofits should follow. And it addresses some board questions. It addresses some compliance questions. Also, it addresses some of questions for just for public benefits corporation. So even if you're not a charity, but you organize as a public benefits corporation, you probably complying with Attorney General. And if you're complying with Attorney General requirements, you should read that guide. California also came out with Nonprofit Integrity Act of 2004. One part of that act is when do you need to have an audit? Because some organization would ask, okay, why do you need to have an audit? Nobody, my funders don't want to have an audit. They trust us. I don't borrow money. Why do I need to have an audit? Attorney General said, okay, if you're a charity and you have a gross revenue of 2 million or more, you have to have an audit. Organization also must establish and maintain an audit committee. And for the $2 million figure, you kind of go through your 990 PF or your Form 990 and come up with the amount, and it's explained on Attorney General website. But also you don't count grants received from the governmental entities if the nonprofit must account how it uses those grants separately. So when you read through this Nonprofit Integrity Act, and it's not a big publication, you can find it on Attorney General website. It addresses who should be on a board, on a audit committee, composition of the audit committee, how the audit committee can overlap with finance committee. Next, please. This slide addresses what actually audit committee should do. and what it's responsible for. So audit committee is responsible for hiring or firing independent CPAs. Audit committee can meet and should meet with independent CPAs separately without oversight of management. So CPAs can actually tell the audit committee what's going on, and there is no management input.
Thank you, Elena. So now we're going to dive into the 990 review checklist. Okay, so I'm going to start off with the your first page of the 990, your part 1 summary and your part 2 signature blocks. On part one will provide a summary of what has been reported on other part of the 990 on a very high level. So on this section, you will see a brief summary of your mission statement and key financial activities. Now, what you want to do here, you also want to list the number of volunteers that you had during the year. And if you have any change to your address, you want to make sure that the address is updated on the face of the return. Also, you don't want to forget that if you have a website address, you want to list that out also on your 990. And then on your second part, part 2 of the 990 is your signature block. And this part needs to be signed by your current president, your vice president, your treasurer, assistant treasurer, chief accounting officer, or other corporate officers. And you want to make sure that all these individuals have the authority to sign the return the date the return is filed. Part 3 is a very important section of your 990, and this is where you have to address or state your program service accomplishment. And this will provide your reader with the organization mission statement in great detail and your 3 largest program in great detail to raise the public awareness of the organization. Now, the statement that your narrative has to be an accurate portrayal of the organization, meaning that you have to make sure that you list, you sell yourself in a way that everybody know that what you did during the year. And this is very important for your to your contributors, because significant contributors tend to look at your organization program service accomplishment to ensure that it is consistent with the organization charitable purpose. And on this section, if you have any change to your operation, or you have a new operation that started during the year, you also want to indicate that, because this is a requirement that the IRS wants to see. Next slide, please. Now we're gonna, in the next several slides, we're gonna dive into your core section of your 990, which are your checklist or required schedule. Part 4 will ask to determine if different particular schedules should be completed. Now you want to make sure that your board of directors review each question and consider what must change during the course of the year. So if a particular question was answered yes, there should be a required schedule that should be attached to the 990. Some of the questions that are really important here are the questions that are listed here, question 25 through 28. You can read through the slide and you will notice that these are really important to look at, or to look through your policies or procedure to see if you have any of these in place within your organization. Next slide, please. Part 5 is your question regarding that will trigger other IRS filing and tax compliance. So this is it can be a tool for your organization to look at, and also to be compliant as far as form that you need to file during the year. And some of the questions are listed here. If you have any number reported on Bastille Form 1023, this specifically for the 990 relates to your 1099 that you file, or W2G that you filed during the year, 1099 related to your independent contractor that were paid during the year, and W2G for if you had any gambling winning during the year, you also have to file this form. And if you have any if your organization comply with backup withholding during the year as well, you have to also indicate a yes or no, and a number of employee reporting on your form W3, which is your transmitter of wages and tax statement. Also, if you had any if you file any required federal unemployment tax, and this relates to your 940, Form 940 or Form 941, if you had any of that you filed during the year, then that would be great. The important part is your unrelated business income. If you had any unrelated business income more than $1,000, then you're required to file a 990T. Make sure that this is checked as well. Otherwise, if you file a 990T and you don't check that box, then there's not a consistency here.
Ben, I'm gonna add something.
Yep.
When you have employees and you said you have number on 2A, but you check no on 2B, what it says to IRS is that yes, you do have employees, but you don't comply with your payroll taxes. So make sure that if you see situation like that, it may be a typo, or if it's real situations like that, you need to fix it.
Thank you, Elena. Next slide, please. Some additional question here on 4A, if you had any signature authority or a financial account in a foreign country, that would trigger an FBAR filing, which is due October 15 each year. This is an important question because missing this question, and if you have one, you need to file, then you will get a penalty for it. I believe the penalty is 10,000, Elena, if I'm correct.
Initial is 10,000, and I believe it's up to 50% of the balance.
Yeah, correct. And then any tax shelter transaction, you need to make sure that if you have any of that, you need to answer the question. And another question that's really important is your quid pro quo. If you have any event during the year and you receive any donation, you have to make sure that you give some kind of letter back to your contributors stating how much they contributed to the organization. And if your organization fails to provide this letter to the contributor, then there's a penalty of $10. Next slide, please. Now we're gonna dive into your governance, management, and disclosure. And this section requests information regarding an organization governing body and management and policies and disclosure. Now, the board of directors really want to make sure they review this question because it's really important. It tells the IRS that you have good governance. So one of the things that they want to make sure is to identify the number of voting board members that you have during the year and those that are independent. And you want to make sure that you disclose any family and business relationship that the board have within with each other. It's really important because you need to disclose that on Schedule O or the 990 or Schedule L, which we'll discuss later. And then some of the hours that does not mandate like a particular management structure or operation policy, you have to be able to have your own governing document within the organization. But as long as you have something in place, it will be really important. I will show the IRS that you have good governance, and will also show that to your contributors that your organization has all these policies in place. As I noted here, this will serve as a red flag if there's none of this governing document in place. Next slide, please. Here I listed some of the questions that will show good best practices within the organization. You want to have a conflict of interest policy and whistleblowing policy, and you want to have a written document retention and destruction policy. Now, if you I'm pretty sure most organizations have a process in determining officers' compensation, key employee, and how to employee compensation. Now you want to make sure that you have a review process and what kind of step you have in place within your organization to get to someone's salary, your top level officer salary. Next slide, please. And on this section as well, there's the 990 is a very public document, as like Elena mentioned, and it has to be on your website. So if you have your 990 on your website, you want to make sure that you retract your Schedule B, because this is a public document and the IRS require that every donor that you have listed on your Schedule B should be excluded when you make it public on your website. If you have it on another organization website or another website, then you want to make sure that you retract the Schedule B as well. And also, do not check the box if GuideStar publishes your Form 990 after pulling it from the IRS.
And I want to add something. You can also give 990 upon request. So if somebody comes and asks to review Form 990, you should give it to this person to review, remove the Schedule B. And we sometimes get questions. Why do you say that I cannot check another website if IRS publishes it, ProPublica publishes it, GuideStar publishes it? This is because instructions say you specifically have to send it yourself. So to be able to check that box. It doesn't mean you have to do it, but if you want to check that box, you should provide a copy. It's not what they get from the IRS.
Part 7, very interesting section of the 990, because this is where you're gonna list all your officers, director, key employee, highest compensated employee compensation. I know this is not a very fun topic because nobody wants to see the salary listed out there, but this is a requirement to the that the IRS has in place. So this will list extensive compensation data, and your board members should really assess how reasonable the compensation here is, and it align with the organization activities and the employee responsibilities, because you don't want to get into excessive payment that would trigger some other filing requirement or trigger some other issues. And you want to make sure that the compensation that you have here within your calendar, for your calendar year or within the organization tax year, and that all the appropriate boxes for the individual are listed. By that I mean, if an individual is an officer, then you don't want to make sure that the right box is checked for that individual, and that officer by officer, it has to be within the organization, the IRS definition. And there's a threshold for key employee and highest compensated employee. So based on those thresholds, they have to be listed as such on the 990 as well. Now, the next 3 slides, we're gonna speak about. I'm gonna speak about your financial data. Now, part 8 is your statement of revenue, and this usually comes from your financial statement. But on this section, you have to break down your revenue between what's related or exempt function or unrelated business income, or what's excluded under section 512 dash 514. What's excluded under 512 dash 514 are basically your interest and dividends. This is the most common one, and your realized gain. Those are not typically related to your organization function, but they're not UBI as well, so those fall into that category. And then you want to make sure that all related or exempt function revenue are organization program related. Now, if you get into unrelated business income, you want to make sure that those activities are not excessive. Your organization doesn't rely on unrelated business income, because you want to make sure that whatever you have unrelated to your organization is a small portion of your total revenue. And as a reconciling item, donated services are typically excluded from your revenue section, and any differences between your financial statement and 990 are basically caused by your fundraising that's been reallocated from your functional expense to your revenue section. And as I mentioned before, donated services and facilities are excluded from this section as well. Next slide, please. Part 9 is your statement of functional expense. This is basically your financial statement. As you all know now, on the financial statement, the functional expense is being provided as part of your financial data. So we typically use what's on the financial statement to complete this section. And but there's some adjustment that we need to do as well when it comes to compensation, which gets broken out further. Now, if you know on part 9, expense get broken out between program expense, management, and general, and then your fundraising activities. This is only for 501c3s and 501c4. But for other exempt organization, those expenses all get totaled out into one column. You don't need to break them out into a program or fundraising or management or general. And one thing to note is that your compensation paid to current officer is not based on the calendar year. It has to be based on the organization tax year, which is different, which could be different from part 7. And any expense that you have on part 11, which is all you list all your other fees, needs to be broken down if they are more than 10% of your total expenses. And miscellaneous expense, I know some organizations would like to lump everything to miscellaneous expense. You don't want to have such a big amount there. Make sure that to the extent that you can, you break this amount down. And again, all donated services and facilities are excluded from this section. Next slide, please. Your balance sheet indicate your financial stability, and again, using the financial statement. But one thing I really want to note here is your loan to officers, and if you have any transaction between those, if there's any transaction between your officers and the organization, this has to be, the amount has to be disclosed on the balance sheet, and you might be it might trigger Schedule L, we will discuss later. And then the organization must follow some procedures. The procedure is conflict of interest policy for reviewing related party transactions to ensure that the loan is fair, reasonable, and in your organization best interest. Next slide, please. One thing I wanted to quick mention here is your California Attorney General. So if you have a negative unrestricted net asset, there's some additional disclosure that you need to make here. This is only when you file California RF-1. This is just to make you aware of that. Next slide. Your reconciling part 11 is based on your reconciliation on net asset, and this is some of the reconciling item here. You have your unrealized gain and prior period adjustment, other differences such as a net asset or fund balance of refund or contribution and program service revenue, reversal of grant expense. And even though these differences may not be grouped on the financial statement, when you do your reconciliation, you need to break them down, break them out so that you can show them appropriately on a return. Next slide, please. And then part 12, you have your financial statement and reporting. This basically just to ensure that the appropriate bus are checked, and if you have an audited financial statement or not, or if you had an OMB audit, then you have to indicate, you have to answer the question appropriately. Next slide, please. Now we're gonna dive into your various your schedule of the 990. As I mentioned during the checklist, there's different questions that will trigger schedule on the 990. Now here's your Schedule A, where that will serve as a vehicle to the IRS and the public, the organization record to the public support desk. Now you want to indicate on the organization reason for public charity, right? So there's a calculation that has to be done over 5 years. So in order to qualify or to meet the public support test, you have to maintain more than 33 1/3% in public support. And if you don't, there's a 10% factor in circumstances that you need to meet as well. And basically, if you're between those two brackets, you should be okay, and you shouldn't be worried about it. And then there's two public support tests that you need to do, and one of them is the under section 170B1A4, and the other one is under section 409A2. So if the organization doesn't meet the 32 1/3%, and it is in danger of becoming a private foundation, but only if they don't make the 10% fact and circumstances test. Next slide, please. It is important for the organization to track that donation for purposes of Schedule A. Now, there's something that you might get. Sometime you might receive an unusual grant that was really large that can make the organization fall below the 33 1/3%. And the good thing about it is that if it is unusual, if it is if it's not something that you usually get, then you're not required to have that for your calculation, because it will really help you within your support organization. So you don't need that you basically need to exclude this for your calculation purposes.
Schedule A, you can only use 10% when you do the first test. You cannot do it for the second. And you also need to attach a statement when you do 10% test. You kind of say, yes, we publicly support it. We have a diverse board. And that's what we're trying to do to make our public charity to meet 33 1/3% test. So you can use 10% test for a while. IRS can come back and ask. I haven't seen them coming back and saying why you're using 10% test, but theoretically they can. So it's a good idea to keep in mind. Also, we had a question with registration. What about tipping? And tipping is when, for example, a private foundation will give a huge grant to a small public charity, which will wipe out all the calculation and tip it below 33 in a sort, or even 10%. So if you work with a small organization, or if you're in a board of a small organization, and you know your public support test is between 10 and 33, or very close to 33, and somebody offers you a big grant, and it could be individual, private foundation, corporation, anybody who's not government or public charity. You might want to run the calculation to see where your public support is going to end up. That's what it's called tipping, when public charity loses its public charity status because of a large donation. And if you receive it out of the blue, because you never solicited, you never ask, it's one thing. But usually for private foundation, people go and ask for the money. So it's hard to justify that it was unexpected. Okay, and now we're going to start with Schedule B. And before we talk about Schedule B, I want to emphasize one more time. Everything is public information except Schedule B. And when I say everything is public information, it only relates to the core Form 990 and schedules. If you have any attachments, such as like 5471 for foreign corporations, FBARs, 8858s for foreign disregarded entities, these forms are not open to public disclosure. For 5471, 8858, IRS actually said if you file it with 990T, it's excluded 100%. They didn't say anything about 990. I personally went a couple of websites and I tried to pull the information to see if they publish it with 990. And I believe they don't, but we don't know for sure. So, but make sure that if you put it on your website and you file your 990 with any other form, such as FBAR, 5471, do not put it on your website. Do not give it to anybody. Especially if you have FBAR for an officer, because he has a signature authority that will have his social security number. You don't want to give social security number of your officers to anybody. Or you don't want your bank accounts in your F-bar to show up on the websites, because that's very easy how people can access it and they can gather the information. You might have problems with your bank accounts. Okay, Schedule B is a schedule of contributors. NIRS says, okay, if your organization gets money from people and somebody donates more than 5,000 or more, you need to let us know who it is. And up until several years ago, it was for all organizations, you tell name and address of the person. Several years ago, IRS said, if you're not a charity, you don't need your name and address, just the amount. If you're a charity and you meet public support test, you might be able to use 2% threshold, but it means it's donations over 2% of your total revenue. So if you're a huge organization, you received, I don't know, $100 million of donations, 2% is a really big number. If you're a small organization and you have 100,000, 2% is a small number, so you go with 5. I want to say again, make sure the public disclosure copy does not have any names and addresses of the donors. And we already addressed California Attorney General Office guidelines. Next slide, please. Schedule C, it's not applicable to everybody. That's where you report your political campaign and lobbying activities. So just, you're gonna have some question on the main forum, which will ask you, did you file an election? Did you do any lobbying? Are you a 501c4, C5, C6 organization? And you have membership dues and you do lobbying. What do you're supposed to fill out Schedule C? So if you're a 501c3 organization and you did make an election, keep in mind, once you made an election, it's an election in place. So what election allows you to do, it actually allows you to use mathematical tests, see if you meet lobbying threshold, how much you can lobby. Because otherwise you need to use substantial. Substantial is not defined very well. But it means if you file the election, it's in place until you file the same form to revoke the election. So if you think, okay, I don't need it anymore, you need to file again. It's not like you file, but you don't do lobbying. It's not in place, it's still in place. So for the membership dues, for organizations which have membership dues, sometimes we see situation when organizations say, okay, I want to notify my members how much of expenses would spend on lobbying, how much the dues are not deductible. So what's going to happen, the organization is going to pay proxy tax, which is 21% on the lobbying amount. But if you're in the management and you don't know the answer to this question, ask for membership due notices and see what it says. Next slide, please. Schedule D, it's a supplemental financial information. It's different for most organizations. So if you have donor advised fund, you fill out one part. If you have conservation easements, art collections, you fill out another part. If you have endowment funds, there is another part. What is the same almost for everybody is details for other securities, program-related investments, other assets. Also, if organization has a separate audit, that's where you will reconcile your financial statements to 990. Sometimes client will say, okay, I look at 990, the numbers are different. I know the auditors did their job, we agreed it's great, we accepted an audit, why your 990 says different numbers. That's why you go to the Schedule D, part 11 and 12, and you see what changes were made. We start with financial statement amount, and we say what was added or subtracted to get to the 990. This reconciles your two numbers. If organization must disclose an uncertain tax position, it must do it here. Next slide, please. Next slide, please. Schedule G is for gaming. If organization do gaming, pay attention to this one. If you have fundraiser, professional fundraisers, that's where it's reported as well. One thing to keep in mind, if you do raffles, raffles are reported subject to threshold reported on Schedule G. Also, California Attorney General Office requires organization get registration for raffles and then submit a report. Next one. So Schedule I and Schedule F, they're pretty similar, except Schedule F will report activities outside US, such as investments as well. And Schedule I, and also Schedule F will report grants to organizations and individuals. Schedule for foreign individuals. Schedule I will report it for domestic individuals. Grants to organizations are subject to threshold of $5,000, more than $5,000. You don't disclose names of people who receive grants. It's just done in summaries. So make sure you don't put somebody's name. This is where your compensation in details are disclosed. And a lot of people just would go to Schedule J Part 7 to see how much people are making, what are they getting? Are they getting bonuses? Are they getting retirement? Do they have special retirement fund? What are their benefits? And first page kind of goes and asks you questions. What actually your top people are getting? Do you have a housing allowance? We don't see it very often. Do you have first class travel? Some other questions, just read through them. They also will ask if you have policies for reimbursement of expenses. Part 2 will break down the information between different columns. Why executive compensation is important? Because unreasonable compensation equals excess benefit transaction. Excess benefit transaction is pretty bad for the organization. If you don't include all the compensation and taxable compensation, you will have excess benefit transaction. What does it mean? If somebody says, okay, I agree on this salary, but can you pay for my house? You don't put it on my taxable income. Just say no. Everything the person is getting, which is not a benefit which excluded under the law, should be included. And then you need to do the reasonableness. And next slide is actually addresses rebuttable presumption. And what does it mean? It's if you follow these procedures when you establish compensation for your top people, then the IRS need to come in and prove that you're wrong. If you don't, then you need to prove that you're right. So it's a good idea to follow the presumption and actually have it in writing, documented in writing. And there is a regulation you can see for more details if you need it. Next slide, please. Schedule L is the transaction with interested person. An interested person is your board of director members, could be a CEO. There is a list who are interested persons, the family of your board of director members and CEOs. It's entities owned by the same people. Some transactions are reported subject to threshold. Some transactions are reported without the threshold. So if you have a board of director member who gave your organization a loan, it will end up in Schedule L. If the organization gave a loan to the board of director members, which it shouldn't, it will end up in Schedule L. Pay attention to this because it's subject with the businesses, it's subject to ownership threshold, but what can happen that you expose the taxable organization owned by interested person. And if you don't pay attention, for example, somebody owns just a tiny fracture and they disclosed on Schedule L anyway, and there is 35% ownership threshold. But it's not only by one person. If on your board sits several people who own the business, you add them together. Next slide, please. Schedule R is very important as well. And why it's important? Because you have to pull all the organizations which are related to your organization. You have to list them. It could be disregarded entity, tax-exempt organization, corporation, which is a subsidiary. It could be CRTs, but for CRTs, you just say, okay, how many CRTs you have. You don't list the names of CRTs. You don't list EINs, because people won't appreciate when their names are listed. So IRS said, okay, you say CRT 5, it's enough. And then you also list transactions between related organizations and tax-exempt organization. When you look at the transaction, part 5, if you have any amounts on line 1 and check yes, but you don't have amounts, or if you have amounts, it can trigger unrelated business income. So for you, when you're reviewing it and you see it, Your questions to prepare will, okay, I can see it listed why it's not UBTI. Yes, you have to document why it's not in a related business. Also important to keep in mind, if you have somebody who is a top person who is receiving compensation from tax-exempt organization, taxable subsidiary, it might be that all the compensation have to be disclosed on 990. So people not only gonna see how much people are getting from the nonprofit, but also from the taxable subsidy. And there is also schedule law, but I won't go through it. And schedule law, every 990 has it. It's an overflow of information. Also, we put answers to questions on a 990. So if you want to clarify anything, it goes on schedule law. So when it says, okay, do you have a conflict interest in policy? How do you follow it? The description is going to be on schedule law. If you want to clarify something that this person work for both organizations, so something like that, you might clarify it on schedule law. And if you think it's important to clarify something, put on schedule law, you reported it to IRS, just keep in mind, don't put any personal information there. So no social securities, no information you don't want it to be public unless it's required. And social security numbers never required for the Form 990.
Yes, another question that came in is an interested person that's considered an employee, even if they're not necessarily a key employee?
I need to check, but it could be that a person is a family member of the board member. We've seen that. You have a board member and then you have, let's say, niece. It may be not a niece, it may be a daughter, it may be a son. And then this person received compensation. IRS said we want to know it if compensation more than $10,000. So that one. I need to check. I think at key employees, it's board of directors. I need to check on the highest compensation.
Great. And please do continue to submit your questions. And as we have a few minutes for any additional questions, I'll just highlight some upcoming events that you can register for. Our next BPM webcast is Top Cybersecurity Threats That Are Facing Nonprofits. And this is available for you to register on our website. And it is Thursday, October 28th from 10 to 11 a.m. Also, we are a member of the AICPA, and as such, we are able to go ahead and offer a discount for anyone who is interested in attending the AICPA and governmental nonprofit training, also in October 25th through 27th, and it is being offered a hybrid, both live and online. So if you're looking for a lot of CPE, there's 3 days of training coming up at the end of October for which you can attend some of that training. And with that, as I mentioned, this webinar and the CPE will be available on our website and via email shortly after the presentation. So this afternoon, you'll be able to receive the presentation, and the video of the webcast will be available within the week. And as I was going over that, Elena, we did get some more questions that came in. And the question was just of what part of a C4, C5, or C6, when would the dues ever be deductible for those organizations?
For the organization which pay dues?
Yes.
One thing which I can think of is if you're a corporation and you have a membership in an industry group, you can deduct it as a business expense, but I need to check with our corporate people. But if you have lobbying, you can't.
Great. And that is the extent of our training and our webcast for today. Please do feel free to reach out to any of us if you do have any questions. Please provide us with any information in anything that could help us or any things that you may want to have future trainings on as we're going forward and looking at trainings for next year's calendar. Thank you.